What's up everybody? Welcome to the Stocks channel. Today in the stock market we saw a relatively flat day and we are still in the Santa Claus Rally, which will take us out to the beginning of January. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we were pretty flat on the day, only going down 0.08%, and you can see the price action is still struggling around our price target, which is just above 477. So remember that I always tell you my price targets could lead to a pullback, and a pullback could always lead to a stock market correction, so you always want to get more defensive the higher we go. Remember that risk increases at all-time highs and risk decreases near strong support levels, and right now we're not near any strong support levels. So as far as strong support levels go, we have the first level at the breakout, which is just above 472. The next support level is down here at 470, and then we have the gap close right around 468, and the strongest support level right now is going to be the 20 simple moving average, which is going to be right around 465. So the bulls are still in full control, and as you can tell, we do have a very strong bull trend. So I'm not trying to say that the stock market is not bullish, it's quite the opposite. We're in the Santa Claus Rally, which is typically a low volume melt up, and there's just not a lot of high volume selling, and you can clearly see that looking at the volume down here that we're going up on low volume. That's to be expected in the end of the year here because everybody's on holiday, and when everybody's on holiday and there's no big money moving, typically speaking, retail is buying the dip, and that typically causes the stock market to go higher. So this really isn't the time to be getting overly bearish, even though it is possible we do get a pullback to any of these support levels before we can go up for another leg higher. Now, if we start breaking out and closing above 477 to 478, we still have some pretty strong resistance right around 480 and the price target at 483. So don't get overly bullish as long as we're still struggling to break out above 477. It's possible we do pull back before we go any higher. So right now you just want to stay the course, hold on to those long positions, and know your exit strategy in the event that we do start breaking down and losing the bull trend. I would just give you some words of caution that going into next year, you will want to expect a stock market correction because we did not see a stock market correction in the entire year of 2021. That doesn't guarantee we have to get one early next year. It's just highly likely, and now that we're breaking out to all-time highs, it's even more likely that we're going to be due for that correction in the very near future. However, as long as we have the bull trend and we're above critical support, you will want to stay bullish. So by no means am I trying to scare you out of your long positions. I'm just trying to tell you to be disciplined and don't be afraid to lock in some profits. Jumping over to the NASDAQ 100 triple Qs, you can see we were down almost 0.5% today, and we do see the triple Q starting to retrace back down to the breakout level, which is right around $400. This is completely normal, and this is actually healthy price action to see a little bit of a retest of the breakout, form a little bit of a bull flag before going any higher. So look for downside support at 400 and the full gap close at 397, and the strongest support levels will be down here right around 394 and the 20 simple moving average at 392. There's no guarantee we have to come back to the 20 simple moving average, but that will be your strongest support level as long as we have this strong bull trend, which is only strengthening. You can tell the bull trend is strengthening because the moving averages are creating separation, so it still looks very likely the triple Qs are going to those price targets up here at 410 and 415. Once we do get that bullish breakout above our resistance trend line just above 405, or you can round it up to 406. So we will have strong resistance right around 405 to 406 with price targets at 410 and 415 with those critical downside support levels. As long as we're above this 20 simple moving average and have the bull trend, it's very likely we're going to see a continuation of the Santa Claus Rally. On the Dow Jones, you can see we were up today 0.29% today, and the Dow Jones is confirming the breakout look with the second day in a row closing above the resistance trendline resistance level, which was just above 361. You can clearly see the Dow Jones is regaining that full bull trend, and we're very close to having the 20 simple moving average crossing back over that 50 EMA, which will confirm the Dow Jones is also in a full bull trend. So all three indices across the board are getting bullish breakouts with bull trends, which does mean we're more than likely going to continue climbing higher, which more than likely confirms that we are going to see the full-blown Santa Claus Rally that takes us into the first couple of trading days of January. So right now it looks like the bulls are in full control across the board, so there's really no reason to not be bullish until we break through some of these critical support levels. On the Dow Jones, downside support will be right around 361, 359, and that full gap close at 357 with the strongest support level down here at 355. On a breakout above the previous all-time high at 365, you're looking for price targets right around 368 and 372. On the Russell 2000, we were down 0.61% today, and we did see the Russell 2000 getting rejected at that 50 EMA and closing below that level. Right now, it's more than likely the Russell 2000 is going to cool down a little bit after getting rejected from resistance. We could be coming back down to support around 219. Below that, we could still come back down to the breakout level right around 215 or retest that very infamous level right around 213 to 214. However, I still think it's highly likely the Russell 2000 is coming up here to close this gap, which is just above 228, and more than likely attempt to retest the breakout level, which is up here right around 231 to 232. If at any point the Russell 2000 can start closing back above 232 and 234, it's instantly going to start looking bullish yet again, which means we could see new all-time highs. However, anything below the breakout level at 228 to 231 is strictly just testing resistance, and we could still have another leg lower. So don't get bullish until we get the bull trend or see a decisive breakout back above at least 232 to 234. Upside resistance on the way there will still be here right around 226, and that gap closed at 228, so watch those resistance levels as well. On the ARKK ETF, we were down 1.83% today, and we still see ARKK looking bearish. We still have a bear trend, and we still have price action getting rejected at resistance and still closing below all the moving averages. Strong support at this level will be right around $94, and then if we break below that, we could be coming all the way back down to 90. And below 90, we're going for another leg lower with support levels at 85 and 81. To the upside, we need to see a decisive breakout back above 99, and we really need to see price action start closing back above about 104 and getting back over the 50 EMA, which is now at 105. So as you can tell, ARKK still has a lot of downward momentum, and it's going to take a lot of damage repair to scare away the bears and get them to stop shorting this ETF. We really need to see ARKK closing back above 114 to send the bears back into hibernation. And as you can tell from the chart, that's a long ways away. Wait for higher highs and higher lows before you get bullish, and respect that ARKK is in a bear trend. On the VIX, we were down about 0.9% today, and we still see the VIX closing well below 20. And as long as the VIX is below 20, we want to stay on the bull. If we see the VIX start spiking back above 20, we could be going back into another volatile period. And next time the VIX closes back above 25, we're more than likely going to see that full-blown correction. But right now, it looks like the VIX is trending down towards support down here at 15, which does tell us to expect more all-time highs and a continuation of the Santa Claus Rally. On Bitcoin, we're currently down almost 6%, and we see Bitcoin is trading below all the moving averages yet again, and we are starting to develop bearish momentum yet again. However, as long as Bitcoin can stay above that previous low, which is right around 46,000, it's still possible this is going to be a higher low, and the next higher high will take us to a breakout level above 53K, which is our bullish breakout. So right now, as long as Bitcoin is above 46,000, I think you can buy the dip and stay bullish. If Bitcoin breaks below 46,000, it's more than likely we're coming down to support at 42,000 or just above 40,000. If we start breaking below that, that means we're going back down below about 39,000, and that does mean Bitcoin is more than likely going into a bear market. We're starting to go lower on increasing volume, so you need to respect that. So if you start to see support breaking down on increasing selling volume, you need to be a lot more cautious because Bitcoin is more than likely coming down to support at 40,000 or 39,000. You can start getting more bullish above 53,000, and we'll start to get the bull trend back above 60,000. On Amazon stock, we were up just over 0.5% today, and we see Amazon holding onto that support level at 3,400, but still in the full bear trend. Right now, you could see Amazon is failing to close back above the 50 EMA, so if we lose the support at 3,400, we could be going down for another leg lower. Strong support levels will be at 33.11 and 32.40, and below that, we could be coming back down to 31.85. Amazon will start looking more bullish if it can get back above 34.40 and definitely start breaking out back above 3,500. But right now you can clearly see it's looking weak and it's in a bear trend. So there's no reason to be bullish until you can see price action breaking back above 3,500. On Tesla stock, we were down about 0.5% today, and you can clearly see Tesla got rejected at our resistance trend line, which is right around 11.19. As you can tell, we did regain the full bull trend today, so it's not like we can't see Tesla break out and go close that gap at 12.08. So a bullish breakout will be a price action breakout above 11.19, but it's still possible we could be coming back down towards any of these support levels down here right around 10.60 or right around 10.18. Below that, we still have strong support at 1,000, and above 1,000, you will want to stay bullish because we do have the full bull trend. If price action breaks down below 1,000, we're very likely coming down here to close the gap, which is right around $940. As long as price action stays above 1,000, it's more than likely we will eventually get the bullish breakout, close the gap at 12.08, and possibly reattempt the resistance level at 12.40. Above 12.40, we're looking for a bull run to our price target at 14.12, so watch for that bullish breakout above 11.19 to possibly start us into another bull cycle. On Apple stock, we were down just over 0.5% today, and we see Apple is forming a bull flag right around this resistance level at $180. We still have a very strong bull trend, and we still have bullish price action, and we're still well above critical support, which is down here at 172 and 170. As long as Apple is above support and has the bull trend, it's more than likely trying to get to our price target up here at 188. Once we get to 188, you'll want to be a lot more cautious because it is possible we see Apple stock going into a full-blown correction once we hit that price target. We still need to get a decisive breakout back above 180 to start on that way, but it does look very likely with the strong bull trend. If we start breaking down below about 176 to 172, start getting a lot more cautious, and as soon as we lose support at 170, we could see that full-blown correction. On the financial sector, we are flat on the day, but we do see price action closing back above all the moving averages for the second day in a row. We're very close to testing a bullish breakout and closing that gap above, so look for that bullish price action. On the industrial sector, we did get confirmation of the bullish breakout for the second day in a row, and we're starting to develop a bull trend. It's very likely from here the industrial sector is going back into a bull cycle, which could be a leading indicator that the financial sector is coming next. The healthcare sector was down about 0.25% today, but we still see a very strong bull trend and we still have very bullish price action, so nothing to be concerned about here. The energy sector was flat on the day with the price action confirming the breakout back above all the moving averages for the second day in a row, and we are starting to develop a bull trend. Wait for that bullish price action breakout above the resistance trend line to start to see if we're going back into another bull cycle. So jumping back over the S&P 500, you definitely want to be getting a lot more cautious as we continue to climb higher from here, but you can clearly see we're in a strong bull trend with bullish price action, and the bulls have the full advantage. You're more than likely going to continue to see the low volume melt up going through to finish out the Santa Claus Rally, so don't be getting overly bearish when everybody is on holiday and the stock market is just melting up. We're more than likely going to get that full-blown correction early next year, but only price action and trend will tell us when the correction is here. We don't want to try to guess and we don't want to try to call a top, because as long as we're in a bull market, time and time again, we continue to see much higher prices than anybody ever imagined possible. That's why I always tell you to stay objective, because nobody truly knows where the top is, so we're not going to even bother trying to guess it either. Everybody trying to call a top is getting destroyed by this market, and everybody staying objective is absolutely crushing this market. You can see here that Bank Trade Alerts is currently up over 12% in the last 3 months, and Bank Trade Alert sends you all of your buy and sell alerts directly via email and text message, and only trades the ETF TQQ. If you're looking for a trade alert service or just looking for a way to be profitable in this market, you can find out more information and how to join Bank Trade Alerts by clicking on the link in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.